Hello guys, welcome to this channel. This is Morix Trading Institute. So in today's video, it is going to be an interesting one and I would like you to stick to this video to the very end. So we're going to be looking at premium and discount level. And first of all, we would like to look at what premium is all about and what discount is all about in the Forex market. Guys, the purpose of this video is to make you understand how the institutional traders do trade the Forex market, what they look out for, their expectations, and before making trade entry or trade execution. But before then, let me explain what premium and what discount is all about. So premium and discount zones refer to specific price levels where an asset is considered overvalued or undervalued respectively. These zones help traders to identify potential buying or selling opportunities. Okay, so now let's look at premium zone. Premium zones are simply areas above the equilibrium level where the asset is considered expensive, right? At the supply zone, when price gets to the supply zone, which is the resistance, it is expected that price would likely sell because it is expensive at that high, right? Investors would consider, it's time for us to sell this value, this asset. So for discount levels, now discount zones are below the equilibrium level where the asset is considered cheap, okay, which is at the support, the demand level. It is considered cheap, ideal for buying, as institutions often buy in discount zones. So it is the opposite of premium zone. Okay, discount is the opposite of premium and premium is the opposite of discount. Now let's look at how it works. Now I'll be making some designs here to show you how it is being done. Price moves in a bearish trend. It forms higher low, lower low, right? And it moves this way. It creates lower low and then it moves to form lower high, and so on and so forth, right? This is how it keeps moving. Okay, so now what we're going to look out is origins. Okay, origins. Now this is lower high, this is another lower high, and so on. This actually broke the previous lower low, right? And this one broke the previous lower low, right? So this is the lower low that this one broke. You could see it, right? Now let me clean this so that we can have proper understanding of what I'm trying to explain. Now, what is the origin? Where is the origin of this current lower low? Where is the origin of this current lower low? It broke this lower low and then we have price move to this support, to this low here, creating another lower low. Where is the origin? This happened to be the origin of this lower low, right? This is the origin. So let's do this. For example, let's do this like this by creating this. And then where is the origin of this current, where is the origin of this current lower low? Where's the origin of this current lower low? The origin for this current lower low is this one, right? So what we're going to do is to identify the premium and the discount of this current structure right here. We said this is the origin, right? And this is the current lower low after it has broken this previous lower low. Now what we do is to identify our premium and discount, we use this our tool right here, place it this way, and then what can we see? When you see price in its retracement, Meanwhile, sorry guys, I actually did the retracement very long and very big, and the purpose is so that I can have a proper explanation so that you can see it very clear. Okay, so when you see price move into this green zone right here, this green zone is our premium and this red zone is our discount, right? So what happened? Price actually moved into this our premium, and then what should we be expecting? We should be expecting a retracement. Now in this our premium level, we can have fair value gap, we can also have order block levels, right? Now what we're expecting once price tap into our premium, it means that it has gotten to a high of overbuying, right? You remember when we read, when price is overbought it will sell, and when price is oversold or cheap it will buy. Okay, so price has tapped into our either fair value gap or other block structure, and then what we should be expecting next is to sell the market, right? And in most cases, now you notice that we have 50% right here, we have 100% right here, we have 0% right here. Now in the case of a bullish trend, let me do it right here. When price is moving this way, it keeps creating new highs and breaking previous highs, right? And let's look at it. Where is the origin of this new high? The origin of this new high is this, right? So let's mark out this area like this. Let's mark out this area like this. Now in this area here, we're likely to have order block right here. For example, we're likely to have order block right here. We can have something more like a fair value gap right here. A fair value gap happening somewhere here, right? So I color it separately, differently, so you could understand what I'm doing. Now you realize that price is either going to respect the order block or is going to respect the fair value gap. Now what does that mean? Looking at it, let's make use of our premium and discount level. We said that's the origin, and then looking at it, now price tapped into the fair value gap, right? Price tapped into the fair value gap. Where's our fair value gap? This area here, where in the real chart you will notice that fair value gap is somewhere right here, and sometimes price does not respect the fair value gap, sometimes it respects the fair value gap. Okay, so sometimes you can have price inducement. You look at it as if price is going to respect this fair value gap, and then it will tap lower and then to the other block and move upward. But here we have price, for example, in this illustration, respecting the fair value gap after it has dipped into the discount level. Okay, always make sure that you see price dipped into the discount or the premium level. Anything outside of that, it is invalid. Now, not that in some cases it will not work, it will, but in most cases you will always be stopped out. Okay, so if your trading style is in a way that you trade fair value gap or you trade order block, good and fine, any of such works. But my biggest suggestion is that if you are trading fair value gap, always make sure that your stop loss is always your stop loss is always below your order block, something like this, and then you target wherever you want to target, right? You target, let me take this out. So if you're trading fair value gap, always make sure that your stop loss is immediately after the order block, something like this, right? So once your stop loss is below your order block, it simply means that price in some cases might dip down and then come to your order block, and if your stop loss is somewhere here below your fair value gap, not below your order block, it will stop you out. But once it is below your order block, which means you've actually entered quite early using the fair value gap method, and then you're likely to get what you want. Okay, so that is by the way. Now guys, so I have been able to explain discount and premium levels look like, and let me know what you think about the video. And if you're wondering how you can set your premium and discount levels on your chart, I will help you by making a video on that. But if you already have it set on your chart, on your trading view, then you can try it out, practicalize it, and then before implementing it on your real account. Okay, thank you guys for watching. Do not forget to like this video, subscribe to this YouTube channel, and drop a comment. Let me know what you think about this video.